Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, October 21st, 2022. So, just finished doing the premium video for the good folks in the gold room, and we did what we always do, which is look at the indices, look at bonds, look at the dollar, looked at some sectors, and try to put all the pieces together. So I wanted to show you guys kind of a little bit of a situation here that I think could be setting up. It's all it lacks some level of stability because the structures aren't particularly good. So because you guys might not be familiar with, the full process here, on the YouTubes, I'm just going to quickly cover it. So think about the different time frames that you have. And then ask yourself what is the trend on that time frame. So you have the weekly, the daily, the hourly, and let's just say the 15-minute. You can go on, but let's just use these four. So if you think about the trend on the weekly SPX or the weekly SPY, what's the trend on the weekly SPY or the SPX? It's down. What about the daily? It's down. What about the hourly? The hourly was down until today. You can see that over here with the 200 still being, the topmost moving average. I could make an argument for either down, or I could make an equally good argument for sideways. I would probably say sideways at this point. And then the 15-minute is it's nominally up. It's weak up, right? So when you have something like this, think of this like cross currents or waves or whatever you want to think about. You have waves down, down, sideways, and up. And so, in very similar fashion, when you have conflicting or crashing waves against each other, they can kind of cancel each other out and just create kind of a lot of conflict. What you typically want to see is for everything to be in one direction. So the weekly down, daily down, hourly down, 15 down, and then that's just easy to play. In this situation, what you have is the weekly down, which is not going to change anytime soon. The daily's down, that's not going to change anytime soon. The hourly was down, now it's sideways, which is changing relatively soon. That could be fixed probably by Tuesday. And then the 15 minutes already weak up, right? So the bulls have this, and the bears have this and this. And they're fighting now over the hourly, right? So I'd like to show you guys a move that was articulated by one of our traders here. His name is TG, although he prefers that you call him Theodore Gordon. And it's what he calls the 50-250. So the 50-250 is going to be on the hourly chart of the SPX. And it basically says that when you get to the 50, which is the blue line, you go to the 200, which is the red line. You will fail on the first test because the red line's on top, it's the 200. You'll pull back again to the 50, and then on the next test of the 200 is where it actually gets through. So that's why he calls it the 50, 200, 50, and then it breaks and goes. And you can see here that this is actually what's happening on the charts. You have the 50, the 200, the 50, and then it's actually trying to get through the 200 now. So the battle going into next week is actually going to be determined, in my opinion, based on the hourly chart. What the bulls have to do here is actually keep the ball going higher. That'll pull this moving average up, it'll pull this moving average up, and the 200 will keep going like this, and then you'll have a bullish stack here. And then once the hourly has the trend structure, meaning the moving averages are stacked and angled upwards, which they are not at the moment, but they're working on it, then and only then can we transition to something larger like a 2-hour, 4-hour, or even a daily. But we're not quite there yet. So going into next week, what I'm going to be monitoring here, because we just told you about the 50-250, what invalidates this pattern? The pattern is invalid on a break back below the 50. So the hourly 50 on SPX has to continue to hold the whole way up until a larger time frame has been fixed, and then we can transition to that. So it makes it very simple to trade this, in my opinion. As long as you're above the hourly 50, then it's a long. If and when it gets back below the hourly 50, it's a flatten out, and you could even get short. right? So this is your benchmark. It's a moving target the rest of the week into next week, and as long as it's above that, it is bullish. Now, here's the thing. Last week, I gave you guys a video. It was around the VIX. Nothing has changed on that, right? So the complicated thing here, when I only get to talk to you guys once a week, is I'm telling you last week the VIX signal. And if you missed that video, I think it was a good one. Go back and watch it. It's last Friday's video. I think it was called "Castles Made of Sand." So go back and watch that video. The VIX signal I showed you last week implies just horrific things happening, and the VIX doing this. But it's all about a timing, right? Trading is another word for timing. And we are going into the midterm elections, and we have a lot of intervention happening. So a level that you need to watch, and you don't really need to watch it, but it will help you if you understand these dynamics, is the dollar yen. So today we actually got the intervention from the BOJ, the Bank of Japan, at the 150 level, basically on yen. That's why you have this gigantic candle and a giant move, relatively speaking, in the yen, because the BOJ started intervening. And so we are at levels now. Dollar yen at 150, the rates at 40 or 4%, although I think they get to 5. We are now at levels where central banks are going to intervene. Another level that they would intervene is the SPX Weekly 200. And then lastly, another level they would intervene is VIX over 30. So you have to leave a little bit of room here, especially in front of the midterms, for some shenanigans, right? A little bit of a gamesmanship, a little bit of short squeezing. But once I think that this runs out of steam, I think the predominant pattern will still be intact, and the predominant pattern is still lower. So we could argue that this is now a proper looking base, right? You have kind of a double bottom here. You undercut it, right? And so if you can get above this swing high here on this little pattern, you could then start chewing up and getting higher levels. So I'm going to give you a couple levels here just for you to write down. First level is 3810. Big level. It's the 618 of the high to low drop, and it's going to be a very important level. Not only is it the Fibonacci, but it's actually the swing high right here. The second level that I'm going to give you is roughly 3900 to 3910, which is basically the next Fibonacci level as well as the daily 50. And then the last level that I'm going to give you, and this is a long shot, but I'm not going to be with you guys next week, so I'll give you everything I have today. This is it's low probability, but if things really get squeezy, right, especially in front of the midterms, right, leave some room for a little bit of gamesmanship, then I actually have an ultimate target here of 4180. And in doing so, let's say that we were to get to this 4180 target. Well, would that really change anything? I'm going to highlight the highs. I'm going to highlight the lows next. So what do you have there? Even on a huge bounce to 4180, it would still be a pattern of lower highs and lower lows. So in the event that that happens, that's 400 points higher. It would change absolutely nothing about the structure of the chart. So again, that's the lower probability one, right? And you must get through this giant zone of massive resistance to even justify looking there. But I do want to just put that in your dish because, again, I'm not going to be here next week, and short squeezes can be very rapid. So I'll close the video just to give you a defined game plan for next week, or I'll give you my game plan and you can customize it based on how you wish. My game plan is I'm going to be looking for 3810 and I'm going to be looking for 3900 pretty much by next week. The idea is invalid if the SPX hourly breaks the hourly 50. So the idea here is only valid if the hourly 50 remains intact the whole way up. If the hourly 50 breaks, then the idea here is invalid and we would go back to short modality. So I do think that at the very least there's a very decent chance we can get to 3900. If we get above 3900, then keep an open mind about that upper target, 4180. And again, just to kind of tie it all together, because last week, I gave you the big VIX video, and folks, you have to be able to hold two ideas in your head. The VIX video is still valid, and the short squeeze setup is still valid. Once the short squeeze setup runs out of gas, the VIX setup will still be valid, right? So trading is just another word for timing. So try to hold both ideas in your head, and you have the game plan and the roadmap for next week based on what I'm going to be looking at on SPX Hourly. All right, guys. Well, that is my time. Thanks as always for checking us out. Leave us a like. Leave us a comment. We always appreciate it. YouTube likes it as well. It helps us get more views. So if you don't mind, let us know. If you have any questions or if you have any pets, let us know what their names are, and that would certainly help us please the YouTube algorithm. All right, guys. Well, that's my time. Thanks again for stopping by, and I'll see you in 2 weeks. Have a great one. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.